Good evening, everyone. What a day today, कल GDP का number आया and market seems to be in a no mode to, all worry seems to have gone out of the window. And market did extremely well. Normally don't see this kind of a upward price movement very often, and today has been this. Will this sustain? Will this continue for the rest of the year, rest of the month or not? I think we'll discuss about this today. In fact, if you remember, last month I could not do equity outlook because the budget was there on first. And hence, I'm doing after 2 months our equity outlook webinar, which is one of the most popular with you people. So let me start with the disclaimer that investment in the securities market are subject to market risk, past performance, no indicator of future returns. Please consult your financial advisor before buying or selling any stock that we may have discussed in this webinar. Now, if you look at this February, the market was extremely choppy. The way we have seen sharp upturn and equally sharp downturn in the market, creating some amount, like it was a little clueless, which direction market want to get settled in. बहुत तेजी मंदी रही market में. Mid and small cap did come under pressure. For a change, if you look at last 12 months or so, mid and small cap has been on a tear. And first time there was genuine some amount of selling pressure coming in. And today I'll discuss also today, while the market went up, small cap did not participated as much as large cap. And if you look at and of course my data will suggest you that for a change, Nifty outperformed small cap. And on the contrary, small cap index closed in the red for the month of February. And that clearly shows that where the money are moving away and where it is moving to. Many mutual fund schemes have announced either they will stop accepting lump sum amount in the mid and small cap schemes, and some have also said that they are not going to take bigger ticket size SIP. So lump sum as well as SIP seems to have come under some kind of a restriction. SEBI also suggested that we need to do a stress test on some of the mid and small cap schemes. Why? Many mutual fund schemes are holding much larger portion of the holding in the company with a limited floating stock. What would happen in that case? You are showing NAV at certain price. But when the mutual fund actually goes and sell in the market, will they able to get that price? Number one. Number two, will they be able to get out at that company in one day? It may take many days and weeks for them to get out of that company. And that becomes a little cause of concern even for the SEBI, because the kind of rally that we have seen in a mid and small cap. And these concerns are very genuine. If you remember, we were the lowest weight in terms of large cap. In fortnight, we completely moved from small cap to large cap. Today, in our PMS, large cap has the highest holding. Because we realized that this danger could create a problem for our investors. Unfortunately, mutual funds are sitting on a time bomb. I must tell you that. Why I'm saying so? For some reason, if there is a redemption, or some reason there is some negative news come any small cap company, it will take days and weeks for these companies for them to exit from that company. And the NAV that has been shown at this one, it's all on the paper. Why? Because you may not be able to exit at the price. And many times what we have observed, the script only talks in the circuit. Then what would you do? You should be able to exit from that, am I right? And if you are not able to exit, it will keep falling, Like I remember one of the market veteran has suggested investing in a small cap is like a mafia. It's very easy to enter, very difficult to exit. And I think some of the challenges some of our mutual fund friends are going to face for some reason if the sentiment has to go a little soft on the small and the mid cap. And unfortunately, retail investors also keep putting more and more money in the mid and small cap. And that also create a pressure on the fund manager because he has to deploy. SEBI guidelines says very clearly that you can't invest beyond more than a small cap a certain percent. It has to be there. So I think it's a double whammy there actually. So that's what the SEBI, that's what the situation. The budget came on the 1st Feb. As we all know, no changes in the direct or indirect taxes, but nominal GDP growth has been put at 10.5% for FY 2025. One good thing in the budget, they maintain the glide path of a fiscal deficit with 5.1% estimated fiscal deficit for FY 2025, that is next year, 1st April 2024 till 31st March 2025. And the fiscal deficit for this current financial year, which is FY 2024, has been pegged at 5.8%. Since there is no change in the corporate tax in the budget, but if you look at the growth in the corporate tax, it has been assumed at 13%. In other words, the profit of corporate, that includes listed and unlisted both, will grow at 13%. That's what the assumption is. RBI also post-budget, RBI came out with the monetary policy and they clearly stated that there are no change in the rate cut, number one. Number two, did not give any indication when one can expect so. But RBI maintained that inflation for the next financial year would remain at 4.5%. The RBI comfort level is 4%, plus or minus 2. So it should fit in that build, but anyway, it's above 4% may not be does give an indication that we should not be too much optimistic on the rate cut front. Indian economy, we all know today, the data for the Q3 came out of very good numbers, 8.4%. And due to that, the nominal GDP for this quarter, that is October to December, stood at 75.5 lakh crore. FY 2024, based on the good Q3 GDP, revised upward to 7.6% from previous 7.2%. And for the full year, the nominal GDP has been estimated at 294 lakh crore by the government, by the Ministry of Finance. At the same time, for FY 2023, that is the last year, the GDP revised downward to 7% from 7.2%. So sometimes, when you read the headlines, you don't get this final granular information. Nielsen came out with some prediction in the month of Feb, suggesting that FMCG growth, that is value growth, would be in the region of 4.5 to 6.5% in 2024. That is this calendar year as compared to 9.3% last year. What does it mean? That you don't expect too much price hike from the FMCG companies in this calendar year purely because of poor demand. Cognizant, which is a IT software company, suggested that there is a weak revenue likely for 2024. That means don't expect too much robust growth from Indian IT software companies. And I was saying that there are indications available in the economy that consumption cycle is slowing down. If you look at the QSR, that is quick service restaurant, the same store growth has been little low. If you happen to listen to some of the retailers' commentary also, they are not so gung-ho. And that end of the season sale which started and then I sense it will come sooner, or maybe we can see some mid-season, end of sale season or mid-season sale coming in from the retailers just to clear the inventory. El Nino is expected to ease by June. That's what the prediction as we speak. Very difficult to know say very surety, and maybe in next couple of months we will come to know from IMD how are they looking at this southwest monsoon. But for some reason, if El Nino goes is and there is a neutral, I think it is good for the country. Why it is good for the country? Because India can't afford to have too poor monsoon consecutively. It could create a problem in the rural economy. It could create a problem of the water shortage, and so on and so forth. India's retail inflation came at 5.1% for the month of Jan as compared to 5.7% for in the month of December. But don't get misguided by these numbers. It has come down. So should we expect a rate cut? Doesn't look like at this point. The result season got over December. And if you look at the quarter-on-quarter, sales growth was 4.7% and the Y-on-Y was 7.8%. The net profit grew marginally on quarter-on-quarter 0.6% and almost 24% Y-on-Y. And since we have completed 9 months in this financial year, the growth, net profit growth stands at healthy 33% of India Inc. And if I have to look at trailing 12 months of India Inc., with the present market cap, the price to earning comes out to 26, which is not a very cheap valuation by any stretch of imagination. So you are basically paying the net profit of for next 26 years, and then you'll be able to recover the money. GST, the number for the month of Feb got declared today. It stands at 1.68 lakh crore as compared to 1.72 lakh crore of January. So while there is a growth Y on Y, there is a decline month on month. Let's move on to the US and the world economy. The US Fed did not change any rate cut. On the contrary, it gave enough hint. Do not expect rate cut even in the month of March. Why? And somewhere the message is coming very loud and clear. Expect longer, higher for longer. Am I right? And today, if you look at the CME Fed Watch tool, it says no rate cut on 20th March, 97% probability, then there will not be any rate cut. Even for 1st May, that is the next FOMC meeting, this month 20th March, am I right? No rate cut, and 1st May 74% probability there will not be rate cut. But probability of rate cut on 22nd June as of today stands at 52%. You go back exactly 2 months from today, I came in front of you and said that even though the world believes that March would be a rate cut, our internal estimate based on our big data analysis suggested that we should expect rate cut only on 22nd June. Today, the world seems to be moving in that direction and coming to very closer to our prediction. But having said that, there is no certainty that we should expect even rate cut even on 22nd June. Why? Because the data points will coming in, and what was looking very certain in the month of March is getting postponed to May and then further got postponed to June. Inflation was expected to be a little lower in the US, but it came down to 3.1%. Of course, it's much lower than what it was there in the month of December, but higher than what was the expected. If you look at the core inflation, it remained at the same level what it was there, 3.9% in the month of January vis-a-vis December. But purchaser price, that is wholesale price, you can show basically increased 0.9% year on year, which was again higher than expectation. So not only retail inflation was higher than expected, but even the wholesale inflation was higher than the expectation. And due to that, and even if you look at the core producer's price, also moved by 2.6%, which is again higher than the expectation. So today, somewhere, the expectation was that inflation will come down. It did not come down as much as what was expected. In the US, if you look at the government bond yield, has rose to 4.26% at the end of the Feb as compared to 3.62% at the end of December. So in other words, almost we have seen 38 plus 26, so almost 64 basis point increase in the bond yield in last 2 months. Even if you look at the US 30 years mortgage rate, it's inching closer to 7%, it's going up. Of course, it's not as high as what it was 7.79% in the October 2023, but I think the rates are inching up. And Britain and Japan both technically are in recession. Why? Because 2 consecutive quarters they reported negative GDP growth. What happened to the market? I think market moved up little bit by 1% or so, but very, very, you can see a lot of green and a lot of red also, right? 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 days the market went down in February. It's a little shorter month, and 9 days it moved up 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. 13 raised to 9. 13 days the market moved up, 9 days market went down. And that's what happened. And it's a very volatile. So sometimes the data does not give you that, but the underlying theme has been really very, very choppy. If I expand the time horizon, what happened to the market on a month-on-month basis? January was down 0.7%. Fortunately, we closed marginally in the month of Feb. Despite the volatility, market did manage to close in the green. And remember, the news flow was not very great for the month of Feb. Why? On one hand, the Gaza, Israel-Hamas war is not coming to an end. There is a problem in the Red Sea and Houthi attacking, and due to that logistic cost going up, the news flow on the inflation part was not so great. The general concern seems to be now they don't expect rate cut in a hurry and so on and so forth. And yet, market managed to close in the positive. Otherwise, January was really bad, 0.7% down. After very great run in the month of November and December, where market moved up by 4.9% and 8.1%, 2 months in a row with a very smart rally. Am I right? And that was mainly driven by few stocks, not all, but it was the rally. Advanced decline ratio, I think I can't recollect in my memory that such a long period advanced decline ratio remained above 1. So from April till today, 11 months in a row, we are seeing advanced decline ratio above 1, which is a very good sign. But what is surprising is that if you look in the month of January, it was 0.7, and in February, minus negative 0.7, and in the month of February, positive 1. But if you look at it, advanced decline ratio was lower in the month of Feb as compared to the Jan. So while the Sensex moved up, but the advanced decline ratio moved down. That does give an indication what is happening in the depth of the market seems to be a little concerned. Now market cap, I think it's just defying all the gravity. Last February, if you remember, India's market cap was 257 lakh crore. 257 lakh crore, today we are 384 lakh crore. It's a growth of 49. If I have to look at today, it will be further high. Why? Because the market did extremely well. And today, India is having a highest market cap to GDP ever in its history. Because I said 300 lakh crore market cap or GDP for FY 2024, that's the estimate, against which we are 384 lakh crore market cap. So you can imagine we are almost at 126, 127, or 128 maybe, kind of a market cap to GDP ratio, which is very, very high by the historical standard. Not only there is a frenzy in the market, and I think somewhere it does call for a caution. Why? Because 3 months in a row, the average NSE cash value was more than 1 lakh crore. More than, and what it was there in the month of Feb, if you look at last Feb, we were at 50,000 crore. This February, we had 1.17 lakh crore daily average cash value. Now that's very, very, it does give an indication that a lot of people are doing buying and selling. If they are not very smart, I'm afraid they will really face a tough time in the months to come. how did the indices perform? PSU Bank continues to be the star performer, and the banks continues to remain under pressure. But what has come as a surprise is that BSE small cap index closed in the red, while the Nifty 50 closed in the green. Normally don't see this kind of divergence happening, and so much divergence that has happened. And our sense is that this will further continue in the coming weeks and months. So if you look at and again, it's not only that happened in the month of Feb. If you look at today also, the small cap index went up by only 0.7%, but the Sensex and Nifty went up by 1.6 or 1.7. In other words, the large cap outperformed the small cap index by almost 2x or more than 2x. Am I right? And that does gives an indication that some selling pressure is happening within the small cap space. People are going out of a small cap company. And due to that, if you should see this FY 2024, there is a huge delta between mid and small cap company versus Nifty 50. That delta will keep reducing in the coming months. So if you look at it, today the Nifty 50 is up by 1.2% or Sensex is up by 0.4% versus mid cap is up by 6.8% and small cap is up by 6%. I think this gap will keep narrowing as we move. So maybe in the month of April, when I come in front of you on 1st April, probability is very high that the gap between the Nifty 50 and the small and mid cap would have further narrowed. And this can happen. Of course, FIs have been selling very heavily in the banks and the NBFCs, and that's why YTD, they are significantly down. Nifty Bank is down by 4.5%, Nifty Financial is down by 5%. This is despite the fact that the market is an all-time high. This is despite the fact that India's market cap is all-time high. Who would have imagined 2 years back that India could have a highest market cap despite private sector banks are not doing well? Unimaginable, am I right? But today that is possible. Nifty 50, again, you look at this diversion. Sometimes, people keep telling your view on the sector should be right, then you should be fine. And I said, don't. Even if your view on the sector is right, but if you end up buying the wrong company, you will you'll lose money. Classical example. Take Mahindra down by 4.5% from IT, Wipro is up by 8.5%. On other end, Divi's Lep is down by 5% and Cipla, which is from the pharma only, is up by 9.6%. Or Sun Pharma, which is up by 11.2%. Hero MotoCorp, which is from the auto industry, is down by 4.2%. But Mahindra, which is part of auto, is up by 17%. Am I right? So this kind of divergence you will keep seeing in the market. So the point I wish to tell everyone is that don't have a view on the sector. Please have a view on the company, because sector mein thoda view sahi ho sakta hai, but if you end up buying the wrong company, you are going to have a tough time. What has happened? Killed out Nifty 50 stocks 2024. What worked in 2023 is extending the gain. And the company that did not perform well in 2023, they continue to keep losing in 2024. Like for example, HDFC Bank, down by 18%, Asian Paints down by 17%, and so on and so forth. I think the trend, and Bajaj Finance, for example, continues to underperform. Okay, Divi's left 10.6. So the point I wish to tell you is that what theme worked in 2023 is continuing in 2024. I am not saying that will continue going forward also, but till now that's how the market has behaved. Indian market did underperform the US market in the month of Feb, not only in the month of Feb, but even in 2000 YTD. In fact, India is not among the best, not the best market in the world, but not the best performing market in the world. We are hardly able to close in the green, but some of the other markets like Japanese market and other markets, they did extremely well. India did not, and Japanese market did well despite the fact that they are basically technically into recession. This chart, normally I don't put Bitcoin prices, but I wanted to put this price. Why? Bitcoin is up by 47% in 2024. It was at 42,665. it goes up to 61,918. And I distinctly recollect someone had asked me, and the argument was very valid at that point of time. The ETFs are allowed, Bitcoins can be held through ETF, why it should not move up? And I said, I don't expect Bitcoins to do well, but the fact is that Bitcoins have done extremely well. Now, my question is that 47% in 2 months, is it melting up too fast, too quick? And if that's so, should we expect a meltdown equally too fast? Is there a bubble that is being built up within the Bitcoin? And if you speak to the lovers of Bitcoins, they will justify. My personal experience has been that something that moves too quickly, too fast, normally that moves down equally too fast. Again, when that happens, I don't know whether it happened in the month, 1 month, 2 months, 3 months. But the history do suggest that what has gone up too quick, too fast is going to equally come down equally fast. So be careful with the Bitcoin. My advice is, don't get carried away by that risk-on strategy. Le lo, paisa ban jayega. Everyone want to get rich very soon, and that's not the right thing. FIIs, after selling very heavily in the month of Jan, have turned little positive in the month of Feb, purely because of the IPO. And if you look at the investment done by local institution is 25,000 crore, which is a very good amount, which they did actually. Am I right? And purely because of the mutual funds are getting a lot of inflows, and that's really helping it. So what to expect going forward? The number one thing which everyone is expecting is that when would the election ka date aayega, result ka date kabhi aayega. Do expect by second week of March election ka schedule. Okay, when would the code of conduct will kick in? How each state will have a election, or each constituency will have a election, and they will also declare when should we expect the government to be formed. Right now, market has assumed that BJP is going to win this election. Opposition are nowhere near to give, even forget about the tough fight. वो fight भी नहीं देने वाले ऐसा लग रहा है आज की तारीख में तो, because clearly because of there is a lot of people are saying there is no kind of a policy from the what we call the opposition party. What they wish to do, what is the vision for this country, is not very coming out very clearly. And each opposition party, even though they are part of India bloc, I think they have their own personal interest to basically what we call manage, and hence there is no kind of a uniform voice coming out to take on the Modi government. So I think that's where the market believes that it's assumed that BJP will again form the government in May 2024. Once the election code of conduct comes in, don't expect any new reform. So whatever reform has to happen, whatever announcement has to come, which came yesterday about the solar and so on and so forth, will come in next 12 to 13 days, and post that, I think the country will move into the election mode. Government, everyone in the government or in the opposition party will do road shows, will try to attract the voters and so on and so forth. So a lot of attention would go towards the politics than the business. Market is likely to remain choppy, whether we like it or not, especially on a mid and small cap. And that's where we believe one has to be extremely careful, in terms of what company you get into, how much you allocate to that company in your portfolio, and what are the reasons why you're getting into that company is equally important. We do believe risk reward is definitely not in the favor of reward at this point of time, purely because this is despite the market did extremely well, okay? Purely because of valuations have become little frothy, the rate of interest are inching up, and there is a probability that we should expect further delay in the cut in the rate of interest, and somewhere the slowdown seems to be happening in terms of the consumption. It's not only in India, but even if you look at the US, the consumption seems to be, if you look at, happen to listen to the commentary from some of the consumer facing company, whether it's a QSR or not, I think somewhere the prices have started hurting or pinching, and due to that, the consumption cycle seems to be taken a little backseat. Inflation and the global news will continue to dominate the market headlines. So I think somewhere, since there will not be any government-related reform, there will be no action from the government in terms of new announcement. I think market will now start looking at the fundamental side of this one, and second thing, the geopolitical news, what's happening there, which will give. Right now, we keep hearing that there could be a truce or there could be temporary break between Israel and Hamas because of Eid. So if that happens, we need to wait and watch. If it doesn't happen, then what happens? And inflation, I think, is one thing which market will closely look at very closely. For some reason, if the inflation again shows little stubbornness, I think it's going to then make market believe or will make market more certain that we should not expect a rate cut in a hurry. Am I right? And there is a fair possibility in next 10 to 15 days, we should expect price of petrol and diesel to come down. Why am I saying so? Purely because of it's a good way to what we call send a message loud and clear to the electorate from the incumbent government, and second thing, it can also help to bring inflation down. Whether that happens or not, we don't know, but that's what we are expecting. Water reservoir level, and I wanted to show you, we were at near about this level last year, same time. It has, and if you look at it, we are here now. So it's substantially has come down as compared to last year. Do expect your city, your taluka, wherever you are, can announce a water cut. And we need to be mentally prepared for that because the reservoir levels are little low as we speak. With this, a small disclaimer and open floor for question and answer. Shyam Sundar is saying historical data suggests that there is a high probability of about 20% Nifty return from 6 months before election to 6 months post election. Aaj present is different. Sir, I would love to see where you got this data of 20% before 6 months and 20% after 6 months. In other words, are you saying that in election year we get 40% return? कुछ 6 महीना पहले और 6 महीना बाद में? Sir, please help me correct. Where did you get this data? I would like to get myself updated, sir. I don't think this kind of a pattern has happened. Maybe it may have happened in 1 year, but that may be more of an exception than the rule, sir. Ajay Ahuja, you may say move away from small cap. However, most of the stocks in new categories and momentum hidden in small cap. What would be the strategy? So Ajay ji, you are right. And if you we do what we believe in. Am I right? We are the people who basically what we call walk the talk करते हैं हम लोग बात नहीं. So I'll show you one interesting slide. What we have done in a PMS, okay? And I think momentum and hidden. I think Mohit and Karan are going on they'll be in front of you on Monday. Sorry, and my sense is that they are going to discuss that point in their presentation. So my request would be just hold on for one more day. On Monday, they'll be in front of you, and you can have you can ask that question to Mohit and Karan, and they are the best people because I don't discuss now on the company specific or the market specific, because I can talk about what we are doing in the PMS. But if you can see my slide, my slide is visible? If you look at it in the PMS, this is for the PMS, okay? We were only 17% holding in the, sorry. Yeah, okay, sorry. This is my PMS presentation. So if you look at it, we were only 17% fortnight back in large cap. As of 28th Feb, we are at 65% in large cap. Can you see this? Then mid cap, we were 57% in PMS, which has moved to 37%. And 26% in small caps just come down to 4%. If you ask me, in next 2 to 3 weeks, this will be zero. So we are doing that because we believe that mid and small cap has a reason to underperform. Okay, so that's what exactly we are doing. But anyway, your question is right. Please ask a very valid question. Please ask Mohit and Karan on Monday, and I think they'll be able to answer your question. Sarkar, what is to be done with portfolio in March? Should I book loss, tax loss investing and wait for expected market to recover during the last week of March as always when the mutual fund pour in morning? Sarkar, sir, this kind of strategy has a double-edged sword. Sometime it will work, sometime it will not work. Your reason to get out of a market should never be the tax harvesting. I never does that, am I right? So I will not do that. You should look at by this company, does it merit to be in my portfolio or not? Looking at the sector scenario, looking at the company scenario, looking at the global scenario, should I continue to hold or not? And if once you decide, yes, I need to exit, then whether it's a profit or loss, please get out. Because normally what would happen, sometimes, you may get out and then you will not get able to get the same company again. And then you will repent, गलती कर लिया, tax, पैसा बचाना, tax बचाना, पैसा बचाने गया, but बहुत बड़ा नुकसान हो गया. Why? Because the script then ran up too quick, too fast, and you could not do that. So I don't do it, and I would not recommend you to do it also. There's one more thing I think he talked about that Sarkar sir बताया कि normally the FI mutual fund will put in money by March end. I'm not so sure this time. That's I must tell you that also. Rahul Kumar, with good GDP data sharing the market, do you still believe that the small cap and mid cap rally will not continue? Too early to say, but profit booking in small cap may come with opportunity cost. So Rahul ji, let me again show you some data. So yesterday that market ka data, am I right? Can you see my screen? So this is today's market, okay? If you look at the GDP data came and market did extremely well, 1.7, 1.6 or 1.7, what we call Nifty large cap gain, the small cap only went up by 0.7%. And if you look at for the month of Feb, BSE small cap close in the red, not in the green. So while Nifty close in the green, mid cap close in the green, small cap close in the red. And our sense is that despite good GDP data, I think small cap will underperform or may underperform. That's why, and we did that because we strongly believe that we did that. That's why fortnight back we basically started moving to the large cap. And what we are doing, so the beauty with us is that we are very transparent in terms of what we do. And what we believe, we not only inform you, we only just don't preach, we also put in action in our PMS portfolio. And that's exactly what we did. And our job is to tell you in a most transparent what we are doing. The choice is yours. Am I right? It's ultimately your money. Sometimes even our PMS customers comes to write to us and say, I'm holding my personal portfolio, my medium small cap. Kya karne ka? And we said, we have no rights to talk about your personal portfolio. Am I right? We basically will do what we believe is right in the PMS. It is up to individual investors what they prefer to do in the personal portfolio. And he said, but what should we do? Should we hold or not? And we said, just use the Markets Mojo score and decide what you wish to do. If you really want us to do what we want to do, please transfer your money to the PMS and we'll be more than happy to then manage that fund also. Idea is that there are restrictions, that regulatory restrictions, where we cannot give a stock specific advice to our customers. So you need to understand the constraint under which we also work. Devaraj, Namaste Sunilji, thank you for providing access to the valuable Mojo platform. As a new Mojo subscriber eager to explore its potential for investing in the stock market, could you advise if relying solely on Mojo currency is sufficient or should I also conduct my own analysis? Sir, if you ask my frank opinion, ज़्यादा कुछ सोचो मत. Please follow this Mojo one in a very disciplined manner and you should be fine. The moment you start doing your own analysis, then human emotions will come into play. कभी book profit करना करोगे नहीं, when you want to book losses, you will not be able to do it, and so on and so forth. And it's all good. And see, we have a beautiful product available on Mojo One platform called Model Portfolio. Follow that in a very disciplined manner, and I think you should be fine. Anyway, welcome on board to Mojo One. Vidhu Kumar, hi Sunil, when you say that we should reduce our exposure to small and medium today's environment, does it apply to mojo stocks also? Mojo stocks are buy and strong buy. Remember, so that is fine. If it is mojo stock, then it should be fine. I don't think there should be a concern there. But I must tell you that in PMS, we have moved out of some of the stocks based on our IP suggesting, irrespective whether they are mojo stocks or not. So I must tell you that also, because we realize that there is a what we call possibility of underperformance, and we do not want to take a chance. But as long as mojo stocks are there, you should be fine. But remember, this markets mojo is a different IP and PMS is a different IP altogether. And hence, what may be a mojo stock on markets mojo may not be a buy in our PMS IP. Frank is this Captain Frank. Could you please advise on ideal allocation in large cap, medium, small cap, considering the present market conditions? I appreciate your sincere efforts to educate retail investors. Thank you, Frank sir. We moved largely to the large cap, followed by the mid cap and then small cap. So my advice would be 60-30-10 kind of a stuff. But having said that, I must tell you that we'll again go back to small cap somewhere in 2024. I don't know when. Whether that happens in July, that happens in August, that happens in September, October, November. But we are not going to remain in the large cap forever with 60-70% exposure. We will come back to small and mid cap at the appropriate time. It's just that we do expect market to remain a little volatile, little choppy, valuations a little this one, and hence we want to protect or restrict the downside to the portfolio value, and that's the reason we are doing that. So 60-30-10 should be a good what we call template to go with. Yeah, thank you, sir. You love the sort of color of my shirt. That's good. I scored a listing gain of 300% on A stock. Should I hold it or sell? Mojo stock is not available. Please advise. Saurabh sir, मुझे मालूम नहीं वो कौन सी company, because I don't invest in IPO market. And off late I've stopped analyzing also IPO, so I don't know which company that. Sir, 300% gain मिल गया ना, ले लेने का पैसा घर पे. कोई दूसरा कमाएगा तो चलेगा ना सर. You can't be the seller always at the top of the price. 300% gain in listing is a very good gain. फिर और क्या चाहिए? So control your greed. I would be in a place without knowing the company, I would give away. देखो, कोई मर्चेंट बेकर इतना बेवकूफ़ भी नहीं होगा कि 300% का आपके लिए गेन छोड़ के जाएगा. So it's a good thing to do that. Suresh is saying, if you keep saying that it is not possible to time the market, if lump sum investments are to be made, the same can be triggered, and we are in agreement with this. But while entering the Mojo PMS as a fresh candidate in the Inter 50 has to be compulsory invest in one go as per SEBI regulation. How to handle this contradiction? Suresh sir, again I repeat, we are not taking cash calls, na? What we are doing basically, so see again, since we believe small and mid cap can underperform, that's why moving to the large cap. So if you give 50 lakhs Suresh ji, we are going to take more exposure to large cap. That's what I am trying to say. So I think your question seems to be that if the market is going to come down, okay, then why do I need to invest at this point of time? I think we are trying to time the market, which we are saying is not possible. So what we say, we are also not trying to time the market. What we are trying to do is that we are playing within the market cap to ensure that even if the market is to go down tomorrow, your downside has been little protected. That's exactly what we want to do. For some reason, if the market does not behave the way it's going to, what we are predicting, we may underperform, but we will not be in the negative. We will not be this one to sitting out of the market. And see, SEBI guideline does not say that you have to invest at one go. Okay, the SEBI doesn't say so. So let me clarify that. It is our investment call that we will never take a cash calls on the market, and hence we are fully invested at any point of time. When we say fully invested, maybe we take 1 or 2 days here and there, but we would basically will fully invest in that. And again, we have become more cautious in terms of which company to get into, which sector to get into, just to ensure that there is a margin of safety for us, and that's exactly what we did. I would not be surprised in 2024, our PMS would have been the top quartile amongst all leading PMS in the country. I would not be surprised. So reason why is simple, because we basically did that readjustment from moving away from small cap to large cap, more careful with the stock selection, more careful with also the which sector that company belong to, because sometimes the tailwind also of the sector can help you to make money and so on and so forth. So my suggestion would be, Sureshji, your question is right. There's nothing wrong with this, but आप 50 लाख तो को मिनिमम चाहिए पीएमएस आने के लिए, and उसके बाद if you want to put some additional money, that money you can put in a staggered investment. That's what you can do that. I hope that answers your question. Praful Bhai is saying, all well, every expert is fearful of correction and small and mid caps, and this is the best time to invest. Also, corrections are healthy and our stock selection with small and mid caps is strong, and I don't see any reason why they would not bounce back. My worry is that we are expecting a correction and might happen, we miss out on gains. I do understand your reasoning on expensive valuation, but sometimes, as you often say, market is own wisdom. We must let things unfold, and based on that, market changes. Since we are here for long term, how do these corrections matter? And also, according to you, we might be able to catch the rally when transition from back to small mid cap. I am confident of your expertise, but expressing my views. Many thanks. So, I agree with you, Prafulji. It's not that it's so easy, shifting from one market to another and again going back to another market. What we've realized, Prafulji, is that we have a fiduciary responsibility with our customers. Based on our experience, when we say that if the market goes down and if we don't do this kind of a course correction, our portfolio will underperform. And that we have learned very hard way in our infinity services in 2022. And many times what we have realized is that investors, even though they were matured, the downside does not matter to them. But what we realized, they did matter to them. They got into panic mode kind of a stuff. And then we said, if that is so, we don't want wealth creation at the cost of our investors' mental peace. And that's the reason we said, okay, we did not do that in 2022, if you remember, sir. So what we said, let's be a little more cautious, because we are managing public money. If that is so, let's move to large cap. We are not taking cash calls. We are remain fully invested. For some reason, if the market does not go down and it keeps going up also, we are very confident we'll still be able to outperform the market. Why? Because of the stock selection that we have done. An appropriate time, see, it took only fortnight for us to get out from mid and small cap to the large cap. And something similar we should be able to do it as and when the time is appropriate. And of course, fortunately, we have a very powerful IP that will really help us to do that. So you are right, what you are saying is right, your concerns are not out of the place. But we are very confident that we should be able to manage in a very effective manner. Vikram Singh, Port Solar PV companies are doing extremely well and future looks great. Due to government thrust, why there are no bojo stocks on the RE sector? Are they missing on really? Possibly, yes, sir. We may be missing out. And sir, we need to go with the IP, am I right? If the IP somewhere is not able to capture that, then we will not be able to do that. It's as simple as that. Maybe it will come at some little late. So sometimes, our IPs work in such a manner that still it's not sure shot, it will not reflect, it will not come up in our IP. Once it becomes sure shot, then it will come up. So maybe sometimes may delay, and hence you might miss out on that kind of extra gain. But so be it, because the rally seems to be more sustainable, more long. Solar story is there for many, many years now. It's not for a 3 months or 6 months. And the kind of budget, the kind of ambition government has of solar module at each and every house, I think it's going to transform. See, remember what's going to happen. The money that you save because of solar power not paying power bill means you have a higher purchasing power. Your money, you will save that money, and that money either can go to the investment or that money can go to the consumption, and that can boost a great to the economy. So sometimes, you not necessarily play the solar story only to the solar. You can also play the solar story through consumption. You can also play the solar story to the investment also by investing in the equity market. Why? Because the saving that is going to happen will either go through the investment mode or it will go to the consumption. Maybe 50-50 or 60-40 or 70-30, whatever the percentage you put in. But that's going to drive the economy. And if that's going to drive the economy, then each and every company, almost each and every one will participate in that growth story. But you are right. Right now we don't have, maybe they may come with a little delay, but our system will flow only and only if we are certain of that company is going to do well. Bibu, looking at a different scenario with some expectation of delay of rate cut by Fed and certain across the world, this wise to invest in gold ETF? So, Bibu sir, we have said in our equity outlook 2024, we do believe that gold and silver should do well in 2024. But that's more of an assets allocation strategy. So we keep saying that you should have a 10 to 15% of total assets in a gold and silver. And gold ETF is a nice way to invest in a gold. Anil is saying, should I advise my daughter to stop SIP in small and mid cap fund and increase the SIP amount to large cap fund? The investment period is more than 10 years. Regards. See, as long as you are doing an SIP, it should be fine if you ask me very frankly, because it will even out. If the market goes down, you will be able to buy more of the same, what we call NAV of with the same amount remaining the same. You are able to buy the more of the same NAV of this one. So if it is for 10 years, it's fine. I don't think you should, and provided you are willing to stomach the volatility in the short run. See, the problem happens that how do we manage the short-term volatility? And that's where, it's very difficult for the mind to adjust to the volatility. So as long as your daughter is fine with the volatility, let her continue that. What we have observed with our investors in PMS is that sometimes they are, see, the problem, PMS का problem ये क्या होता है, because you are able to see your price कितना ऊपर गया कितना नीचे गया portfolio, which we normally don't see in our mutual fund. हमारे आपको मालूम है कि NAV कितना ऊपर गया कितना नीचे गया. Sometimes you don't know whether it's outperforming, underperforming also. Am I right? How many of you know that mutual fund जो आपने invest किया, it is underperform, outperform the respective benchmark? No one knows. In PMS तो वो दिखता है, हर रोज का दिखता है कि भाई इतना ऊपर गया benchmark, इतना portfolio मेरा ऊपर गया. And that creates a problem in the mind, and that's the reason. So as long as your daughter Anil ji is able to stomach the volatility, then I would not recommend her to switch from mid and small cap to large cap. As I told you, somewhere in 2024, we are going to again go back to the mid and small cap. At what time we go, we don't know right now, because it's all depending on how the market behaves. But we'll certainly go to the mid and small cap. Why? Because Indian market always been a market for mid and small cap. And if you wish to really generate huge alpha, it's only possible by investing in a mid and small cap. Davis is saying, I understand 50 lakhs is the minimum for PMS. If I want to start with around 20 lakhs, are there any option for PMS or any other portfolio management service for such amounts? Davis, there is no, to see this SEBI guidelines apply to each and every PMS house. It's not that it applies to us only and doesn't apply to someone else. The SEBI guidelines very clearly says you can onboard the customer with initial amount of minimum 50 lakhs. Then investor can keep adding 1 lakh, 2 lakh, that is fine. That is all permissible. But minimum corpus has to be 50 lakhs, and that 50 lakhs has to come at one go. It cannot happen that you invest 20 lakhs today, maybe 10 lakhs after 3 months, another 10 lakhs after 3 months, and that's why you take it 50 lakhs. That's also not allowed. The customer has to come with minimum ticket size of 50 lakhs. Gopala Krishna says, yes, if petrol and diesel price comes down as predicted, two-wheeler companies should do well. Is it right? Yeah. I don't know really, sir. Is that there is a correlation between that? See, sir, in two-wheeler, it runs only on petrol. It doesn't run on diesel, to the best of my knowledge. Am I right? अभी वो माइलेज क्या देती है? सपोज वो पेट्रोल का प्राइस 2 रुपया 3 रुपया 5 रुपया में नीचे आ गया If 1 liter, I don't know, I have never drawn in my life the two-wheelers, I don't know. अरे अमिल कितना देता है एवरेज टू व्हीलर? 40-50 किलोमीटर देता होगा ऑन एन एवरेज पर लीटर, एम आई राइट? अच्छा 20-25 किलो, क्या बात करते हो यार, इतना कम थोड़ी देता होगा. नो 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 नो, बिकॉज माई कार गिव्स मी, आई एम जस्ट लुकिंग एट माई कार एवरेज क्या आता देता है. ओके 1 सेकंड. नहीं नहीं, इतना कम थोड़ी देता होगा. आर यू श्योर आमिर? बिकॉज माई कार गिव्स मी एवरेज ऑफ 10.1 किलोमीटर ऑन एन एवरेज, जब से वो हुआ है उसका. तो बाइक, ओके, व्हेन आई अज्यूम दैट बाइक गिव्स यू 20-25%, 20 to 25 liter per kilometer. I'm just giving an example. 5 rupees is not going to make much of a difference in this one, am I right? It was 5 rupees per liter. So per kilometer is going to come out very, very fractional. So I don't think that's going to... See, the two-wheeler company can do extremely well when the rural economy does very well. Because most of the two-wheelers get consumed, especially bikes get consumed in the rural India. So that's where I think the lot of... And even the price of two-wheelers has gone really high. Today that you don't get a decent two-wheeler less than 1 lakh because of various new features got added to the two-wheeler. So that's how it works. So I don't think it's going to, Gopala Krishna sir, is going to be a major game changer because of change in the reduction in the petrol price is going to change the fortune for the two-wheelers. No. Lata Sudhe Singh, when you say IP, what is it? And what is the expansion of IP? IP is nothing but our intellectual property. If we have devised certain intellectual property, Lata ji, which help us to select, which will help us to decide which company we should get into, which company we should buy. And the same way that intellectual property help us to decide which company we should move out from. So that's what this IP stands. IP stands for intellectual property. Sambhaji saying, sir, can I invest in model portfolio in this time of huge amount? Of course you can invest, sir. What is wrong with that? And even if you look at a model portfolio, Karan was making me understand that more of a large cap comes into the model portfolio. So I think you should go ahead and do that. Abhishek, companies in junior sector are moving like there is no tomorrow. However, market hardly picks in this sector, in the top picks. Any reason behind that? Any genuinely lacking in fundamental? Please advise. I think someone also asked a very similar question, Abhishek ji. Our IP has to throw. Not necessarily that our IP is able to identify all the multi-bagger, am I right? We are not claiming that. So, and then our IP may sometimes a little slow also in terms of, because, we look at the 5 years fundamentals of a company to be part of the mojo stock. And this company don't have that 5 years of a strong finance, and that's why it may taking time to reflect in our buying list. That's the only reason I can think so. Because see, today we have realized too much on the quality of the company, and some of these renewable energy company did not have very strong numbers to say so in last 4-5 years. Very recently they started doing well. So maybe it will take some time for us, to our system or IP to catch them and then reflect in our buying list. Ajit is saying, thanks for detailed presentation. Had infinite portfolio since 2000, gone through the stage of slowdown. Capital protection is very important, and we have given the steering wheel to you, a PMS customer. Ajit ji, yes, you are right. We have learned, see, because my job was to interact with the customers, and I've seen that, investors could be bol deta hai. Or we are for, I can withstand the drawdown and so on and so forth. But जब वो होता है ना रियल लाइफ में, उसकी फट जाती है. वो basically become little panicking kind of a stuff, and that panicking is the biggest recipe against the wealth creation. आप कुछ ना कुछ गलत डिसीजन ले लोगे, and that's going to be this one. So we said let's move. थोड़ा पैसा कम बनेगा चलेगा, okay, but मन को शांति तो होगी. And that's exactly the reason we did that actually, because we have learned, we know our customers well now, because we interact with them almost on a daily basis. So we understand the cycle. There will be few exceptions who doesn't matter. I agree with you that all. But when we look at this completely heterogeneous group that we have in our PMS basket, we need to then see what is the majority of the investors' psyche. And that's exactly what we are doing. But having said that, we are very confident we'll be able to outperform. As I told you, in 2024, we will be among the top quartile amongst all leading PMS in the country. We did that in the month of Jan. The Feb data is still not yet out of other leading PMS, so I will not be able to comment on that. But based on my limited understanding, we should be in the top quartile. And exactly that will keep doing what is right for the investors, and we will not hesitate to take decision. Even if it's a tough decision, we'll do that. Why? Because it is needed. It's a need of an hour for our customers. I know you will have more questions, but it's almost, I overstood the limit by 5 minutes. It's 8:05, and time to say, have a great weekend. Enjoy your weekend. Spend good quality time with us. Next week, the market will be very shorter week. Why? For the very simple reason, we have Mahashivratri next Friday. So market will remain only for 4 days, not 5 days. And of course, tomorrow the market is open, but it's only for the very limited period. So enjoy your weekend. Have a great time. Spend some good quality time with the family. Go out, have a good time, because market is giving you good returns till now. Why not to spend some money to revive the economy also? The money that you are making in the market, maybe you can spend some money that will help to boost the economy. With this, take care, good night, great weekend.